Welcome to Big Idea Hurdly, where you can learn something new in just a few minutes. Today we study together the book Future Money, Fintech, AI, and Web3 by Ronit Ghose, in which we probe into how the fusion of technology and finance is transforming money into a more diverse, digital, and decentralized entity. Ronit Ghose runs the Future of Finance team at Citi, and prior to this, he was Citi's global head of banks research and co-head of Fintech research.
Don't go away. Hurdly the editor will be right back with the story.
In our journey to understand the future of money, one of the most striking shifts is how technology is revolutionizing finance, making money more digital, decentralized, and diverse than ever before. This transformation isn't just a prediction, it's already happening, and it's reshaping the way we think about currency, transactions, and even value itself. Let's start by diving into the first significant change, the diversity of money. In the past, money was largely homogeneous, whether in the form of coins, paper currency, or even early digital transactions. But today, the landscape of money is a kaleidoscope of options. We're seeing a proliferation of new forms of currency, from cryptocurrencies like Bitcoin and Ethereum to digital wallets and central bank digital currencies. These innovations aren't just variations on old themes. They represent fundamentally new ways of storing and exchanging value. A compelling example of this shift is the story of Bitcoin's rise. In the early days, Bitcoin was dismissed by many as a fringe experiment, a currency for tech enthusiasts and libertarians. But over time, it has become a major player in the financial world, with a market capitalization that rivals some of the largest companies in the world. The book notes, Bitcoin's ascent from a white paper to a trillion-dollar asset class is a testament to the power of decentralized technology and the growing desire for alternatives to traditional financial systems. This story highlights how Bitcoin, through its decentralized nature and technological innovation, has carved out a significant place in the global financial system, offering a new kind of diversity in money. But it's not just cryptocurrencies that are diversifying the world of money. The rise of digital wallets and mobile payment systems has also played a critical role. Take the example of Alipay in China. Initially launched as a payment platform for Alibaba's e-commerce sites, Alipay has evolved into a super app that offers everything from loans to insurance, all within a single platform. The book recounts how Alipay's integration of QR codes for payments revolutionized everyday transactions in China, making cash almost obsolete in urban areas. This shift didn't just change how people paid for goods and services, it changed the very nature of money in China, blending the physical and digital worlds into a seamless experience. Another example of diversity in money can be seen in the rise of stablecoins. Unlike cryptocurrencies such as Bitcoin, which can be highly volatile, stablecoins are pegged to traditional currencies like the US dollar, providing the benefits of digital currency without the wild price swings. The book shares a story about how Tether, one of the most popular stablecoins, was created to offer a digital currency that maintains a stable value, allowing for easier integration into global commerce. This innovation has been particularly impactful in regions with unstable local currencies, providing a reliable digital alternative for both businesses and individuals. The second major shift is the decentralization of money. Traditional money systems are centralized, controlled by governments and financial institutions. But the rise of blockchain technology has paved the way for decentralized finance, where transactions can occur directly between parties without the need for intermediaries. This shift is not just technological, but philosophical, representing a move away from trust in centralized institutions toward trust in code and algorithms. A story that vividly illustrates this decentralization is the development of Ethereum and the concept of smart contracts. Unlike Bitcoin, which is primarily a store of value, Ethereum is a platform that allows developers to build decentralized applications using smart contracts. These contracts automatically execute transactions when certain conditions are met, eliminating the need for a trusted third party. The book describes how Ethereum's founder, Vitalik Buterin, envisioned a world where financial agreements could be coded into existence, reducing the friction and cost associated with traditional contracts. This innovation has opened the door to a new era of financial services, where loans, insurance, and even complex derivatives can be managed without a bank or broker in sight. Decentralized exchanges provide another powerful example of this trend. These platforms allow users to trade cryptocurrencies directly with one another without relying on a central authority. The book tells the story of Uniswap, a leading DEX, which uses automated market making to facilitate trades without needing traditional order books or intermediaries. Uniswap's success has demonstrated the viability of decentralized trading platforms, showing that even complex financial transactions can be executed without centralized control. Finally, let's talk about the digitization of money. While money has been moving toward digital formats for decades, the pace and scope of this digitization have accelerated dramatically in recent years. Digital currencies, whether in the form of cryptocurrencies or CBDCs, are becoming increasingly prevalent. This shift is not just about convenience, it's about changing the fundamental nature of money itself. One of the most striking examples of this is the ongoing development of China's digital yuan. The book tells the story of how the Chinese government, recognizing the global shift toward digital money, decided to create its own digital currency. Unlike cryptocurrencies, the digital yuan is fully controlled by the state, offering both the benefits of digital money and the control of a traditional fiat currency. The Chinese government has already begun rolling out the digital yuan in major cities, with plans for nationwide adoption in the near future. This move is not just about keeping up with technological trends, it's about positioning China at the forefront of the global financial system, using digital currency as a tool of both economic and political power. Moreover, the book highlights how this digitization of money is not limited to national currencies. Corporations like Facebook, now Meta, have also attempted to create their own digital currencies, with the most notable example being Libra, later rebranded as Diem. Though the project ultimately faced regulatory challenges and was shelved, the ambition behind it demonstrated the potential for private companies to create global digital currencies that operate outside of traditional banking systems. This move, had it succeeded, could have reshaped the global financial landscape by giving a tech giant significant control over a new form of money. As the editor of Herdly, by learning these things, we can anticipate a future where our understanding and interaction with money will be profoundly altered. The convergence of technology and finance offers us not just new tools but new ways of thinking about value, trust, and the very fabric of economic life. In the future, we might see decentralized systems and digital currencies not just as alternatives, but as the primary forms of money, reshaping everything from personal finance to global trade. In exploring how the fusion of technology and finance is transforming money into a more diverse, digital, and decentralized entity, we've seen that this shift is not just theoretical. It's already unfolding in tangible ways across the globe. From the rise of Bitcoin and Ethereum to China's pioneering digital yuan, the landscape of money is evolving rapidly. One striking story from the book illustrates this transformation: the development of Kenya's mobile money system, M-Pesa. Launched in 2007, M-Pesa began as a simple mobile payment platform for people without access to traditional banking. What started as a basic service for transferring money quickly grew into a financial lifeline for millions. By 2020, M-Pesa had over 40 million users in Kenya and beyond, enabling everything from paying bills to accessing loans. The book describes how M-Pesa's success in Kenya demonstrated the power of mobile technology to leapfrog traditional financial infrastructure, providing financial inclusion in a way that banks could not. This story underscores the profound impact that digital and decentralized money systems can have, especially in regions where traditional banking has failed to reach. As we reflect on these examples, it's clear that the future of money will be shaped by the ongoing convergence of technology and finance. The shift toward more diverse, digital, and decentralized forms of money is not just a trend, but a fundamental reimagining of how we store and exchange value. As the editor of Herdly, understanding these changes equips us to navigate a future where money is more accessible, inclusive, and innovative than ever before.